The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 31st, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, I do mean the easiest way to do that, is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, that means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 in the afternoon. I want you to know I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in 877-927-6648. If you can't dial in, we've got you covered. You can let those fingers do the walking. That means you can send me an email, steve@tfnn.com. Inside the subject heading, if you'd be kind enough to put radio show question, and in the Tiger's Den. And if you're a member in the Tiger's Den, well, then any ping will do. You've got priority seating. Well, actually, phone calls have priority seating. In any event, let's go ahead and get this show started on Trick or Treat Wednesday. Nothing but treats here. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trade up 336 points. 25,211 is the print. S&P up 42, NASDAQ up 183. That's 2 7/10%. Russell's up 13. Semis are up 14. Tranny's up 102. So everything is mean and green. If you're going to call it mean, I wouldn't call it mean. I'd say lovely green. Lovely green unless you're short. We'll take a look at both sides of the market. Spot volatility index off 7%, only down $1.82. Trade out at 21.53. That's a signal. That's a signal. We'll talk about that. Or at least Stevie believes that's a signal. And it's not a good signal for those that are mean and green. If we take a look at gold, it's trading off $9, 12.16. Silver down 18 cents. Leading the charge the upside, it is Amazon up 73. Google's up 46. Booking Holdings 43. Intuitive Surgical up 30. Netflix up 19. So some big numbers to the upside. To the downside, AutoZone leading the charge off $11 and change. Maxar Technologies off 11. Shutterfly down 11. That's a little stinger at 17% to the downside. IPG Photonics down 10. So photo companies getting the snot kicked out of them. All right. So what's the message of the markets, right? Well, we know we got an election coming up, and I was just before the show was started, I said, I don't know, is there anything here that gives you and I an edge? I only got back to 2006. You have seen my chart that shows where the average, where the Dow makes a bottom during the midterm election cycles. We've looked at midterm election cycles, election cycles. We've taken a look at every cycle that's out there, average seasonal cycle, all those types of things to give you and I an edge. If I just go back to 2006 out here and take a look at midterm and election cycles, and then you'll see the blue arrow out here. Was there any edge? No, not in 2006. If we go to 2008, here's 2008. That's the high that came in on November 4th. So there was a retracement up into it, but that's not enough to, to mean a heck of a hill of beans, if we're going to call it that. All right, so let's keep going out here. I mean, like, was there a significant top or bottom here? If we take a look at November 2nd, 2010, you'd have to say, nah. That wasn't going to help you out by knowing there was an election. Here, if we take a look at November 6, 2012, no, not really, at least as far as I see. Maybe you see something different out there. Here, if we take a look at 2014, November 4th, mark was already an uptrend. No big deal there. Nothing, that sticks out at us. If we take a look at the election here in 2016, Now, of course, if you were up like I was, and many of you were, there was just huge, giganto moves inside the futures contracts. Right now I'm just looking at the S&P 500. And so no real big signal there. This is the last one that we've got, 2016. So fast forward to where we're at today. What does this mean? Is there any kind of edge? I don't see the edge right there with regard to the election cycle or midterm cycle. It's just looking at those events that we just looked at. Okay, so that's good because we can eliminate that from our thinking out here. At least I think we can eliminate it from our thinking. So what are we going to use? Hey, nice move today. Of course, it's all going to be about the end of day close. Now, when I say the end of day close, for a number of different things, if we were to just rely upon Stevie's indicators, Stevie's Rhodes momentum indicator signals, the markets would look like this. When I say look like this, let me pull this over. What you're going to see here is bottom signals all over the place. These are confirmed bottom signals as of 1:12 in the afternoon. It's for each of the equity futures contracts on a daily time frame. It's basically for all of the indices, the S&P 500, the Dow Jones, the NDX, the Russell, the semis, the transports, the NASDAQ Composite, the New York Stock Exchange, the Wilshire 5000, the New York Stock Exchange 100 U.S., 100 international. The FTSE, yes, the FTSE. We had a bottom signal yesterday. The Hang Seng, bottom signal today out here. Bottom signals galore. And support, stay right there. You got Stevie's red line. It says daily OUL support. There's your support. Price needs to close above those levels today. If it does, the signal is giving you the message of a bottom. So that's interesting. So we know we've got that piece of information to use out here. If we were to take a look at the New York Stock Exchange right now, that's what we're looking at. What we have out here is we have its advanced decline oscillator reading above zero. Has not been above zero since the exact day was September 4th. Yeah, September 4th. Now, what does it mean when that advanced decline oscillator is above zero or below zero? Above zero, buyers are in control. So they weren't really in control yesterday, or you couldn't call them definitively in control yesterday. You can today. However, it's always about follow through. Yeah, it's always about follow through, which means tomorrow that line, if we close this way, I don't know that we will, by the way. I'm not saying that we will. I'm saying we're trading above that. I'm saying there's enough market breadth, so we're trading above zero at 1:12 in the afternoon. Question is, where are we at 4 p.m.? And I don't know the answer to that question. But I do know that if you close above that and you have follow through tomorrow, man, it is telling you that the bulls are back in town. Slight problem, though, but that can be dealt with. Spot volatility index trade at 2121 right now, trading well above its 50-day exponential moving average. So now you've got a diverging message. You have two opposite messages out here. But that can be dealt with. It can be dealt with. But in order for it to be dealt with, you and I have to figure out this. And when I say figure out this, I'm referring to the mere fact that right now at 114, spot volatility index trading at 2127 above every single futures contract, taking us out into June of 2019. That is likely the hidden message out here. Steve Rhodes with TFNN. Not so fast. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So before we were going to the break, we were taking a look at this, not really a chart, but this data screen out here. And you'll see the spot volatility index up at the top of it. It's trading right now at 21.25. You'll see its 3-month counterpart. You'll see the 6-month, and then you'll actually see the 1 year below that. And then we can see each of the equity futures, the VIX spot volatility futures contracts trading below there. So you'll notice that the one that is out in front is the spot volatility index. It's above everything. That is a dislocation, which will resolve itself and will set up the bullish move. But the thing is, between yesterday and today, really this should be at least trading underneath some of these futures contracts, or at least below the 3-month volatility index or the 6-month, and it is not. And there, I think, is the biggest clue as to what's going to come. And what's going to come is that there may be a bottom in, but we're going to see some huge volatility probably between now and the election. The only reason why I say that is because you and I know that the stuff that's being put out on the tube is nothing but boob tube garbage. Okay? Most people, we won't spend much time on this, but just to kind of tie the thought together, you know, every time I hear somebody yap about interest rates rising, the Federal Reserve, and that's why we've had this problem in October, they are so full of it, they don't even spend a moment taking a look at the past pattern behaviors out there. Interest rates rising is not the problem. Look, folks, between 1927 and 1929, I don't have the data here on my screen to show you, but you can look it up. The Federal Reserve doubled interest rates in that 2-year period of time, and the market still went higher. From 2004 to 2006, interest rates 17 times in a row. The S&P 500, it's right here in front of you on the chart. Interest rates have been rising since 2015. There is no statement that is more garbage. Did I say garbage? I meant manure. I meant the worst kind of smelly garbage than pushing that on you. I'm not going to do that. I'm going to tell you just the opposite. I'm going to tell you what the chart patterns here show. So that's not the issue. Rising interest rates. The Fed has told us interest rates are going to rise. Hey, that's great. And the U.S. dollar, in essence, is going to get stronger. Our markets love going higher with the U.S. dollar index going higher. So that's not the issue. We'll go ahead, case closed. Get somebody on the show to prove otherwise. You can't. They can't. You can't look at the charts and say otherwise out there. You just can't do it. Okay, so then if it's not interest rates, and look, folks, it is not the tariffs. You want to talk about a party going on over in China? This is the party. You've got the Chinese yuan breaking out above previous highs out here. Yeah, I know people say you can go back to 2008, but the reality is what you and I do is we take a look at swing points. This is a monthly chart. We're going to end the month above the swing point high out here from December of 2016. Charting analysis says you've got an A to B equals CD to the upside. Yeah. But let's not go there from a currency standpoint. What does this mean? This means if you buy Chinese goods in yuan, it just got cheaper. It just got cheaper. So when that whole another set of garbage stuff gets resolved out there, and it will, unless the currency is going to just simply flip-flop out there, these guys are going to be the winners. You, China, Walmart, Costco, you name them, whoever's buying goods from China. As long as they're buying them in yuan. And look, these guys are smart. They have been buying goods from China, so they certainly know how to do this. Yeah, with tariffs. With tariffs. Absolutely. Now, we don't know what that end result is going to be, but and I can't guarantee you anything. I wish I could. I guarantee you a good show. I'll guarantee you stuff that probably nobody else will share with you. That I'll give you for sure. But I think that China ends up on the good side of this stick out here. But that's neither here nor there. The point is that, or the point that Steve will make, is this move that we've seen here in October. This wasn't about tariffs, interest rates, or anything else. What I think the spot volatility index is communicating to you and I, because what we can see out here, we just take a look at the numbers with the spot being above all the futures contracts, is this is just about a short-term event. And the only short-term event that is out here that I know of, that you know of, is next Wednesday, next Tuesday. Next, it depends on when they get all the votes counted, right? So next Tuesday/Wednesday with regard to the market reaction out there. And this just says, just like we saw during election night, there could be huge swings out there, huge swings. So yeah, I can give you, and the charts say, look, bottom. Now they will say bottom if in fact you're to see the NQ close above, and it's trading above it right now, 69.8735. That's the bottom of its daily box out here. Brand new box formed today inside the Dow, 25,143. If price closed above 25,143, that's a real positive. That's a real positive. I'd have to then go see where the weeklies are. I can do that. I might as well do that. Shoot, I'm talking to you. Where are the weeklies out here? Here's the weeklies are going to get us up to 26,167. Yeah, that's what that says. But one thing at a time. The ES Mini, if the Dow closes over the top of its box, the NQ above the bottom of its box, there could be a heck of a lot more rally. Heck of a lot more rally. The ES Mini up to 2780. You're 27.29. Now, in today's day and age, we get 50-point moves rather quickly, so maybe that's really not so much out there. But I would be watching the NQ and the Dow equity futures contracts and the way that they are trading. Because right now, 125, they're breaking out above resistance. And that says old resistance should become new support on any pullback, and then they should continue to move higher. Now, and we know the New York Stock Exchange advanced decline oscillator is above zero. If we take a look at the NASDAQ 100, especially important because it's gotten the tar kicked out of it, right now it has 28 issues trading above the top of their profile and only 21 trading below the bottom. What you're seeing is a bullish crossover as of 1:25 in the afternoon. I do not know if this is going to end the day like this, but if it does, those crossovers are fairly significant events as well. So there's the NASDAQ at 125. It's also given us a bullish signal. Could be a head fake. should be a head fake because that spot volatility is just saying something else out here. Just saying is what Stevie's saying to you. If we take a look at the S&P 500, well, that's the weekly. Let's come to the daily time frame. You can see that it too has a bullish crossover. Now you have to ask yourself, should you pay attention to these bullish or bearish crossovers? Well, the bearish crossover inside the S&P 500 with regard to its stats profiles, and right now 182 trading above the top of the box, 106 below, but the last bearish crossover was September 25th. So not too far away from the high out there. I don't remember the exact day of that high, but yeah, worth noting. All that being said, and here, let me just summarize it. I can find you nothing at 126, nothing. But yes, there was a low put in yesterday or the day before. I just am not completely buying it. And maybe you shouldn't either. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's try to kill two birds with one stone, so to speak. And one of our dinners was asking about real estate investment trusts and is looking at possibly investing in some of those. I'm assuming you're talking about the publicly traded ones, but maybe not. Maybe you're going to look at some private real estate investment trusts. If that's the case, boy, you better make sure you understand exactly what those leases look like, who's leasing those buildings, and all of that type of stuff out there, especially as a passive investors, and how easy, or I should say how difficult it is to get out of those. If you're just looking at using those as a part of your portfolio, if you're looking from a portfolio standpoint and you want to take a balanced approach, so to speak, this here is in essence if you were a wealth manager client for any of the large broker dealers out here, without having to pay them their funds, this would in essence would be their breakdown. And depending upon your age category, and so this one here, this is a J.P. Morgan Chase portfolio, and so and what they're going to do out there, DITM, code word for something, your age is 58, you would be breaking down your portfolio between U.S. equities, foreign equities, fixed income products, real estate, and unfortunately, at age 58, they'd probably have you pretty much piled in on the fixed income side, some good percentage there. Bad news bears, so you don't want that. They would put you in some real estate. They're typically the ones that they use, not just these exclusively, but you'd look at the Schwab U.S. REIT out there, SCHH is it, and as well as you'd probably put like 3% of your portfolio in that, 3 or 4%, 2 or 3%, somewhere in those lines out there, inside some real estate investment trusts. You'd take a look at the global real estate. VNQI is one of them that you could take a look at. They'd have you in some type of, they call it commodity exposure. They don't really mean it, but, some type of commodity exposure. They'd have you in some master limited partnerships and everything. So, but here's the deal. With regard to that, I mean, if you take and the beauty, so I'm glad that you asked the question, just simply so that I could bring this up. When there is the next major top out there, you're probably not going to be able to hide anywhere. The old Ray Dalio, and I don't mean that he's old, but I'm going to refer to as the all-weather, I think that's what he calls it, right? The all-weather fund out there, which is what he's employed in essence for the last 25 or 30 years out there to be able to take you through all kinds of markets. It doesn't work anymore. It only worked because of the last 30 years and the type of bond market that we were in. And here what you're going to see is just daily signals, tons of bearish type patterns out there. Now you can see some bottom signals inside on the column third from the left out here. This is Stevie's black box system. So this says, and by the way, as far as the U.S. equities, they'd probably have you look at just simply the core S&P 500. It could be the SPYs, could be IVV. It just takes a look at, you just take a look at basically costs inside those funds. Probably have you in Berkshire Hathaway, mid-cap index, micro-cap index, the Russell 2000 value, just to have like a little bit of a spread out there. And then foreign equities. Now, here's the problem with following this out here, DITM, and that is we just talked about interest rates are going to go up. The Federal Reserve has told us interest rates are going to go up. It's not going to spook the U.S. stock market. What it's going to do, it's going to continue to trash emerging markets out there. There is no other choice. The reason there is no other choice is because all of the debt that was denominated in U.S. dollars, and as the U.S. dollar gets stronger, their local currencies, they've got to come up with more money just to make the interest payments, let alone pay back the principal out there. So that is just bad news out here. Yeah, there can be trades, but you really got to take a look at it as a trade. And I'd say you want to limit your exposure on the foreign equity side out there. You got to limit your exposure on the fixed income side. You've got to go to short duration timeframes if that's what you want to do. Okay, and the real estate investment trusts out there, you really need to investigate those. Here's what I want to finally get to. Okay, and that's this, and this is how I kill two birds with one stone. Kevin asked, was the bottom a couple of days ago? Was the bottom a couple of days ago the bottom for the year, I think is what he asked for in the Dow. I don't know. The Dow priced in U.S. dollars is still in a consolidation. It's still between 23,360, the lows in February, April, and 26,616. And not until we get over 2616 does this market just vroom, vroom, vroom to the top. But here's what I want you to know, DITM. The Dow priced in euros, it's still in breakout mode, even after this horrible October. And the Dow priced in pounds, it is still in breakout mode. That group of traders is pouring their dollars into the U.S. stock market. That is going to continue to go on until some other event takes place. And I just don't see what that event is, not today. So what you really should be doing is exposing yourself more to U.S. markets. than you should be inside foreign equities and really study those real estate investment trusts out there. And so I hope that that helps you out. And I hope that that helps answer the question, has a real bottom come in inside the Dow? It's possible. Certainly possible. Here's the Dow equity futures contract. It's held support. As long as it stays about 24,745, then all is good. Hey, we've got a caller on the line. That's John in Philly. John, thanks for calling. Thanks for holding. How are you today?
Hey, Steve. Oh, I'm very good. Thanks for taking the call. I wanted to ask you, Steve, about the Russell 2000 index. And I am not sure if the IWM ETF is the right vehicle to use here, or alternatively, the futures contract on that Russell 2000. I make an observation and ask you a question. The
Sure.
observation is this. The high on the Russell 2000 futures contract, that'd be the December contract today, got up and made a peak at 15.29. And that high price, and we're a little bit below that now, nothing big,
Sure.
but we're below it. And the swing low back, I believe it was from Thursday, October 11th, was
October 26th.
I'm sorry?
October 26th, right?
Oh, I'm thinking the preceding swing low, which
Got it,
was
okay.
a couple of weeks back.
Got it. Okay.
I believe it was Thursday the 11th.
Okay, I'm
that
with you. Okay.
That was 15. That swing low was 15.31.
Yeah.
Today's high is 15.29. I've got a couple of tools myself, one of which says be on high alert that this rally today didn't get above that prior swing low. My question to you is there anything in your work that would warn similarly that the high made today could conceivably give way to a decline to lower lows, please?
Let me ask you a question. How would you, or would you just simply ignore it if you use that same swing point day of taking a look at where the Dow equity futures contract, the NQ futures contract, and the ES are trading? In other words, each of those are trading above that swing point. Would you let that factor into your thought process, or no, you're just going to say, hey, you know what, the Russell 2000 is weak, and this is where you would short? Is that kind of the thought process, or?
Yeah, you know, you raise an excellent question, and you make the same observation I made in looking at the difference that is.
Well, let's talk about this when we get back from this break. I see we're, John, I apologize. I see we're just about to go into a break here, but please hold on the line and finish your thought when we come back from that. This is Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're on the line with John in Philadelphia. We're taking a look at the Russell 2000 at this stage right here. He and I are looking at the daily equity futures contract, and I'm going to have John finish his thought on the question that I posed, but I also wanted to just throw it to you as well, John, because you asked about, do I have anything in my toolbox? And the chart that is on the screen right now is the Russell 2000 equity futures contract, but utilizing my NinjaTrader system. Now, this NinjaTrader system also uses and has the TAS market profiles. It uses the exact same math and logic to calculate those profiles, but every now and then it shows different profiles than the e-signal system, which also shows different profiles than the Bloomberg system, and sometimes it's a little frustrating. You just have to just go with the flow out here. And so the NinjaTrader system, which is very reliable, by the way, with regard to its chart patterns, has a top of its bearish structured box at 1528.20. So if we use that, I would say if price closed over that, then all of a sudden it's short-term bullish. And that's right around the high of the day, not the exact high of the day, but 1528.20 would be something that I would be looking at. And the way that I would use that is I would say, well, if price closes above that, then likely price is going to go to the top of the daily profile that's formed on the e-signal system, which is 1551.80. But the question that I was posing to you was the fact that the swing point low inside the Russell 2000 equity futures contract took place on October 12th. The other equity futures contracts, that same swing point in essence was the day earlier, and in their cases they're trading above that swing. And the question was, does that influence you at all when taking a look at the Russell 2000?
Steve-O, that I've made the same observations. The answer to that question of yours is no. Okay. And hence explains why I asked specifically, not about the stock market, but about the Russell 2000.
Yeah.
Clearly, on this bounce, it's the weaker of the four. And I appreciate you putting up the NinjaTrader data.
Yeah.
Coincidentally, the top of the TAS box is right there at the high of the day. That's of interest to me. And I just might ask you, on Tiger TV, as we're looking right now at the Russell 2000 futures contract, that daily chart, is that red line, is that what you call your oscillator unchanged line?
It is. And so price is above that. So we had price moving lower, doing with less relative energy. Yesterday, in one day, you had the bullish reversal signal, bullish engulfing candle, and it closed above the oscillator unchanged line, which yesterday was 1505.90. As we speak right now, it's at 1503.20. So 1503.20 would be support. But in order to truly get a confirmed bottom with this Rhodes Momentum Indicator set of tools out here, you also like to see price close over the top of a task market profile. So if you and I were just exclusively using Ninja Trader's chart, and there's no reason for us not to, we would also take a look at the box and recognize that it's bearish in structure because the center line at 1504 is closer to the top at 1528 than the bottom at 1469. And folks, what the center and the top are telling you, the top of the box is where sellers are sitting. That's where they believe that they want to go ahead and fire away to the short side. And the center of the box is where you have both buyers and sellers. When the center is closer to the top or the bottom, in this case to the top, you've got this larger pack of sellers, in essence, this is my thinking in theory, to overtake the buying that's in there. So if price is able to close above a significant level of resistance from a market profile standpoint, there's nothing more bullish than a failed bearish pattern. So if the bounce is over, at least in the Russell 2000, you've got the October 12th that you looked at, John, the top of the profile inside of the Ninja Trader. And the cool thing is if you were to see price close above that, then I think what we also know is based upon the bottoming signals we got yesterday, the follow through today, you'd be looking at 1551 as the next upside price target inside of the Russell 2000 equity futures contracts. That is how, I would use the set of tools to try to figure that out.
Yeah, thanks so much for that, Steve. I just share an observation with you. The price swings, the intraday volatility has gone crazy large relative to what we've experienced the past 5 months. Namely, Monday we had a 103-point S&P point range, and then merely from yesterday, Tuesday, at the 2640 low, which occurred like 1 o'clock or something, we've gotten up to 2730, so up 90 points in the blink of an eye. Given these wide swings, of course, any precision on where we stop or don't stop, of course, is highly uncertain. So,
well, one thing I'd throw out to you. Sure. One thing I throw out to you, and I just put a 30-minute chart out here because, if we're going to get some wild swings, and one of the other tools that you will use is you'll use the Tommy DeMark system. And in this case here, what's on the charts are the Tommy DeMark setup, the initial of the sequential or the combo count out here. And on a 30-minute basis, what I would be looking at as an ultimate support level for that time frame specifically would be the low of the bar from 1 o'clock in the morning, and that low out there is going to be 1511.40. But I also know you, and you know me, and what we're both waiting on is at about 1600 hours, the exact time. Oh, I'd have to open it up, and I will open it up.
Good old boy, right? Some lunar event going on, right?
That's right. I know it's right around the 1600. And both you and I will be looking more closely at what price is trading at that specific time for all of these contracts versus probably anything else.
Stevie, I just, of course, I've said this to you many times publicly, but probably not as you're doing your show. Just a big hat tip for that discovery of yours back in 2013-14 about the utility of looking at the prices at the time of apogee and perigee and using those as reasonably good trading pivots. So big hat tip and thanks for that discovery.
Hey, my pleasure. And come the contract close today, we'll have a pretty good feel overnight what those pivot points mean. So thanks for calling. Always good to talk to you, and thanks for that observation inside the Russell 2000. You bet. You bet. All right. So let me take a quick peek out here, see if there's any questions that were emailed in. Just one from Kevin. Well, wait, I apologize. That's not maybe true. Just somebody here talking about the #1 rankings in the Timer Digest, which just came out yesterday. So the cool thing is I still have #1 in the S&P, #3 for gold, #3 for bonds. And there's no other individual who's in the top 5, even in the top 10 that I know of for each of those things out there. But anyway, that's just a comment from Mr. Mo. Okay, what else are we going to? Oh, let's take a look at gold. It's trading back $10. So what's going on inside of gold? We'll have to do that when we get back from this breakout here. But gold priced in pound sterling, yeah, is kind of the culprit out here today. Steve Rhodes with TFNN. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we're taking a look at gold, or I mentioned gold before we went into the breakout here. And the charts that you're looking at on your screen right now show you gold priced in dollars or expressed in dollars, priced in euros, yen, and pound sterling. And the reason that you want to take a look at whatever instrument it is that you're trading to get a good feel is because what we're doing is we are trading with or against our brethren, sisterin, uncles, aunts, cousins, long lost. What's one of those places? You take a swab of your spit and you send it in, and it tells you your family tree out there. Well, this is your family tree when it comes to trading and investing, whether you're related or you're not related. You want to know what it is that they're looking at on their screen. If they too sell and buy gold or treasury bonds or the U.S. stock market or foreign equities, we just looked at inside the Tiger's Den or with you, a typical wealth manager portfolio. And those guys are going to be, in essence, 100% invested all the time. long and strong, not even short, just long and strong out there. And their counterpart over in Europe also has a foreign equities section. So they've got their local markets, and then they have foreign equities. So it kind of goes back and forth. Hey, get to the point already, Steve-O. The point is that in order for any instrument to really be moving higher, you've got to have nothing but buyers, so to speak, out there. And that means that on their screen, in their local currency, it has to be moving higher. If it's moving higher in dollars and moving lower in another currency, major currency, by the way, which the euro, the yen, the pound qualify as, then you're never going to get any traction. You get traction on the upside, traction on the downside when it's all moving in the same direction. Right now, we have seen today, overnight, you saw gold move lower in pound sterling fairly significantly. Same thing in yen and in euros, just so. So now the reality is no swing points have been broken. This right now is just an orderly pullback. But gold price in dollars, it's made about a 0.382 retracement or about 0.786, depending on the swing point you use. 12.11 should be support, if not 11.89 in U.S. dollars. Folks, stay tuned. Thanks so much for being here. Stay tuned for David White, your favorite polar bear. Have a nice Halloween, and we'll see you on, I won't be here tomorrow or Friday. I forgot to mention that. Hey, take care. Have a nice weekend.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading